திரு ஆனந்த் ஸ்ரீனிவாசன் அவர்களின் சாதாரண பங்கு அசாதாரண லாபம் தமிழ் வடிவம் இப்போது கிண்டிலில் கிடைக்கிறது. இந்த புத்தகம் புதிய முதலீட்டாளர்களுக்கு பங்குச்சந்தை பற்றிய ஒரு அறிமுகமாக இருக்கும். இந்த புத்தகத்தை நீங்கள் கிண்டிலில் வாங்க விரும்பினால் வீடியோவின் கீழே இருக்கும் லிங்கை கிளிக் செய்யுங்கள்.
Good evening. So the world is already talking about a recovery. America is growing at an extraordinary pace. America is expected to grow at 6% this year. Its inflation is already running 4.5%. In all pandemics, after they have passed, whether it is the French plague of the 1830s, the Spanish flu of the 1918, or the current coronavirus pandemic, always have after effects. The after effects are of three in nature. One, people would have saved up huge amounts of money during the pandemic, and they will come to splurge a lot of it once the threat of pandemic recedes. Second, there will be new ways of doing businesses, and new businesses will emerge. And third, the poor and the middle class will turn against the wealthy and the upper class because they would have deserted the country and deserted them during the pandemic and try to evolve themselves in. So there is a possibility of political turmoil all around the world. While these changes are the norm, and America and the rest of Europe, which are now vaccinated enough people to open up their economy, have started to roar, there are enough problems that have started to develop. There is always a sting in the tail. In the previous pandemics, the central bank did not have such a big role in the economy. So the interest rates were not manipulated to such levels. So there were levels of big booms, deep busts. We started to correct these booms and busts only after the Great Depressions, because the fear of recession has meant that the Federal Reserve has kept on continuously cutting rates. The last time the world really saw a very high interest rate regime was when Jimmy Carter was president and Paul Volcker was at the Federal Reserve, when rates had to be increased to double digits to control inflation. Jerome Powell is today talking about that this inflationary trend is transient. This is something we have to wait and watch, because no inflation is transitionary. Once inflation sets in, nobody wants to reduce prices unless forced. In America, there is already a trend of these problems. Wall Street is full of articles of prices going up, and even real estate prices adjusted for inflation reaching 2008 levels, fueled by mad speculation. 20% of all America's houses that are being sold are investors who are buying houses cheap and want to get better yield than what they would get in a bank. Low interest rates have pushed these people to behave like this. But along with that is another problem, the problem of supply chain. From timber to semiconductors, there is a huge shortage. Shipping time from China to America has never been quicker, and costs of shipment have gone up 3 times after the pandemic. In spite of all this, there is heavy shortages, and prices of semiconductors and electronic devices have gone up 20%. In China, because of long-term trends, plant labor participation dropping, gate prices in China are continuously increasing. So this has meant that the costs have to be pushed in to the Americans. The Americans have not spent last year and have stashed cash for 1 year. Plus, they have received 3 generous stimulus checks, which are now being spent. And this is one of the reasons why the stock markets in the United States has been buoyant, as people are now betting on the stock market, because anyway they are not making any returns on bonds, forcing stock prices to be sky high. As the recent Bitcoin crash has shown, every speculative frenzy has an end. This generation of investors, people like Chamat Palpatia, Naval Ravikant, have never experienced high interest rates. They may know in theory about what high interest rates can be doing. But from the Clinton era, the Federal Reserve has printed money and moved in every time there is a hint of a recession. even in the 2008 recession. By the time the Fed decided to taper and increase rates, even before rates reached 2%, immediately they had to cut for this coronavirus pandemic. Today, the American Federal Reserve is buying $120 billion of government and mortgage-backed securities to keep the liquidity alive. This kind of liquidity sloshing is making returns unattractive for retail investors who are piling on to risky assets such as tech stocks and Bitcoin. Both of these have corrected because of the fear of inflation. There are some former governors who believe that if Jerome Powell allows this to go unfettered for 1 or year and a half, then Fed rates have to go up to 4 to 4.5%. 4 to 4.5% before inflation cools. If this scenario plays out, the world is in for a big liquidity shock. The Spanish flu also taught us another lesson. In Dar es Salaam today, what was known as Tangikia then, people were so tired of the Spanish flu that a famine was caused because there was a lot of harvest but not enough labor to go and cut that harvest and bring it to the markets. Even today, in Britain and United States, people who have got coronavirus are showing that there is lethargy and it takes between 12 to 16 weeks for somebody to recover from coronavirus. While we can expect the trend to be like of France, that after the Great Plague would spend all the money and there will be merriment which forced France to enter the Industrial Revolution era after England. But we have to remember the world is a different place today and the interest rates are ultra low and the governments will be forced to cut back on public debt and raise taxes and increase rates. How that will play out in the market is something we need to watch, and the sting in the tail can be very harsh. It is better to be safe than sorry. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.